Welcome back, everyone. Gold traders remained active in the past days with notable price movement on Friday and Monday for the metal. The moves could be signaling further gold price activity, while this report will be an overview of the most important fundamentals and technicals related to the gold market. At the moment, the financial markets are reacting to the uncertainty over the latest virus concerns. The spread of the COVID-19 variants is forcing some countries into a widespread tightening of restrictions on movement. The markets may not be focusing so much on what is happening at the moment, but rather on the upset that seems to follow due to expectations on improved economic and lifestyle circumstances that could be postponed. Gold has been up in the past 4 consecutive weeks, creating new highs. Even though the panicky reaction of the market on Monday, the 19th, pushed gold prices higher, the precious metal did not break to a new weekly high for the time being, possibly leaving this scenario in for the following days. In addition, the negative reaction from investors and analysts on Monday was felt across the board, with the US dollar breaking to a new monthly high, according to the dollar index, the major US stock markets losing very notable ground, and most importantly, US bond yields dropping. Bond yield movement, which tends to indicate investors' confidence while on the high and the opposite when on the low, was in the epicenter of the markets on Monday. The yield on the 10-year benchmark Treasury note posted its biggest one-day decline since March. Dropping bond yields can be a major source of support for gold traditionally, thus the yellow metal gained ground during the US session on Monday. Yet, very characteristic was also the correlation between the US dollar and gold, which seems to be positive at the moment. This can be a sign that both are used as a safe haven resort for investors. We cannot stress enough the importance of monitoring important economic data in the coming days as in the past. Gold was seen as responding to figures. On Friday, the 16th of July, the US retail sales figure for June may have overwhelmed traders as the figure moved from negative to positive territory. On Friday, as the US session market progressed, gold fell about $12. In this case, the bears could be taking the best out of the market, yet the lesson here is that opportunities can arise from the most simple to the most complicated economic releases. Looking towards the days ahead, some economic releases from the US could be seemingly fit for gold traders to use when engaging the market. Starting on the 22nd of July, we get the weekly initial jobless claims figure and the US existing home sales figure for June. Moving to the 23rd of July, which can be considered a key day for traders, the preliminary market US manufacturing and services PMI figures for July will be coming out, and we expect the market to anticipate the readings with great interest. On the 26th of July, we get the US new home sales for June, and on the 27th, we get the durable goods for June and the US consumer confidence for July, which is a rather important indicator. Moving now to our technical analysis, please note this is gold's 4-hour chart. Gold is currently trading between our R1 1825 resistance and our S1 1807 support. With the upward momentum that started since the end of June and the recent correction lower, a triangle has formed that stretches to both the R2 1833 line and the S2 1795 levels as displayed on our chart. The R2 and the S2 have been tested in the past days and can be used as indicators at this stage, as some divergence was observed when they were reached. The RSI indicator had reached the 70 level when the R2 was reached, while the brief drop to the S2 is displayed with the weak 35 level, both incidents circled in red beneath our chart. We would also like to note the sideways movement noticed previously between the R1 and the R2 lines, and lowered between the S1 and the S2 levels, as the price action could be caught in those ranges in the following days. Of course, the highest level for this report is the R3 1845 and the lowest is the S3 1785, which we consider as levels that would require a breakout or a breakdown to be reached. In any case, our personal view is that gold could be in an upward momentum with some sideways inclinations. Thank you very much for your time and focus. We appreciate your participation, and if you like this video, please feel free to share and subscribe. Please note, as an effort to support traders on as many fronts as possible, We are now presenting live weekly webinars on trending subjects, and all our subscribers are welcome to participate. From everyone here at IronFX, wishes for solid trading.